Much for joining us.
It's my pleasure, Wilf. Good to see you again.
I hope you caught Stephanie Link's very kind compliments there just before we joined you.
I think I caught it, but if they were good, I must have heard them.
Yeah, exactly. We're going to start, Brian, if we may, on the sort of macro picture. I interviewed you on December the 4th at the Goldman Sachs conference. You were very upbeat then about your outlook for the U.S. economy in 2019. Are you still as upbeat?
Yeah, we still have our experts for the U.S. for 19 at 2.2. That's probably come down from when we were talking there by, 0.3, 0.4, and that's largely due to the slowdown around the world and the trade and all the things we talked about back then. But I was hearing your colleagues talk about, if you look at consumer spending and you think about 16, 17, 18, and now 19, you saw it grow through the peak at 18. It's now consistent where it was in 16, 17, sort of growing at 5% in our card spending and our use of cash as opposed to 8%. And that's consistent with the economy slowing down. What we don't know, and will take a while to find out, is what was the impact of the shutdown and things in the first month of the year in terms of just enthusiasm in December, your colleagues were talking about, as we see that play out. But you're seeing with mortgages picking back up, you're seeing the consumer in the game, continuing to spend. It's the biggest economy in the world, almost by itself, and we consider to be constructive on growth.
To the point of the consumer, I mean, retail sales data came out yesterday for February and significantly disappointed. You're always very up to speed on what consumers are doing. What have you seen for February and in March?
And so what's interesting is they were lower in February, but they restated the month prior, which we all wrung our hands about up. And so this data is hard, and I ask our economists all the time, how come it gets moved around considering that other data doesn't. But if you look at Bank of America's data, which will be $3 trillion of money spent on credit, debit cards, ATM cash out, teller cash out, checks written, P2P transfer in a year, that is going to grow 5-ish%, 4.5% to 5% for this quarter. That's all forms of cash, digital growing faster and non-digital, and that's consistent more with a 2% type of growth economy as opposed to 3% we had last year.
Larry Kudlow was on CNBC last week. He called for a 50 basis point Fed rate cut. Do you think that's warranted? I
think that the economy is growing. The Fed is trying to get themselves more to neutral. That's what they've said. I think the goal of the Fed is, their charter is not to try to push the economy. It's to make sure the economy, price stability, unemployment, things like that. And I think that's where we are. We're kind of to a 2% plus growth economy, and we've got low unemployment, and wages are growing faster than people think, and people are spending. I think they're playing it the way you should, is just let the data tell you what to do. And they were clear about that. The market's gone back and forth, but they've always been clear that when they got in this range, they're going to pause to take a look at what happens next. And that's the thing we have to be focused on, what happens next, and that's the type of data you're talking about. So
the economy, from all the data you're seeing, is not in any kind of emergency scenario that warrants further immediate action?
No, the big debate here is we're slowing down. And we're slowing down a little faster than what people had predicted before the trade wars and stuff, and some of the stuff that happened at the end of last year. The reality is that's coming back through the system, and I think if things fall in place with agreements with China and other things, you'd see that would sort of fade to black and go away from people's memories. But right now, that's what caused people and the activity to slow down. The rest of the world is more interesting. It's slowed down to 3.3% in our projection for 19. We're probably as high as 3.8, to the early fourth quarter last year. That is a large part due to it being more affected by these elements than the United States. But the United States economy is strong. It's growing. More people are working now than ever. The unemployment claims are low. Wages are growing fast. Our wages have grown 6% per annum for the people in our company that are below medium wage in our company and down. I mean, it's a good place right now, and I don't think we need to juice it. I think we got to let the economy work.